This is Matthew Cratter from Trader University, and today I want to talk about how to protect yourself, how to protect your savings and your family's savings from central banks like the Federal Reserve. If you're interested in learning how the economy actually works so you can make money in bull or bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So what we do know is that central banks, they like to print money and they like to dilute the existing supply of currency and destroy its purchasing power. And what they do is they print money and they buy assets like treasuries and munis and they add them to their balance sheet. And this is very bad. This is one reason that hamburgers used to cost 50 cents when I was a kid, and now they cost $5 or a lot more in some cases. And so how do we protect ourselves from this? Well, to answer that question, I'm going to refer you to Raoul Pal. He just did a great tweet. If you don't know this guy, very smart guy, I do follow him on Twitter. He is a retired hedge fund manager. He publishes the Global Macro Investor. I'm not a subscriber to Real Vision or Global Macro Advisor, but I do enjoy his Twitter feed. This is a very smart guy, worked for Goldman Sachs, and as I said, had his own hedge fund, was one of the few guys to predict the mortgage crisis, the great financial crisis in 2008 to 2009. So definitely someone worth listening to. You don't have to agree with everything he says, but I think this latest tweet of his was really quite excellent. And so I wanted to go through it with you guys as a way of answering the question, how to protect yourself from central banks. So he begins by talking about how many people own gold as a way of protecting their purchasing power when currencies get debased. And currencies can get debased, obviously, things like the Zimbabwe dollar or the Turkish lira, but it also happens to major currencies over time. And one way to fight this is to own gold. But as Raoul points out in this tweet, if you compile the growth in the four major central bank balance sheets, what he calls the G4, and these are the G4 central banks are the Bank of England, and again, these are all central banks. They're not banks that you can do business with. Bank of England, Bank of Japan, BOJ, the Fed, obviously the Federal Reserve, which is a central bank in the US, and the ECB. This article says that together they control 85% of the capital markets that trade in the world. So these are the big economies. These are the big central banks. And they've all been massively growing their balance sheet, especially in 2020. So what he does is something that I often do, and I can't do it because I don't have a Bloomberg subscription, so I'm going to borrow his image here, but he looks at the growth in these central bank balance sheets and he normalizes it by putting gold in the denominator to see how well gold has protected your purchasing power against what real inflation probably is, which is growth in central bank balance sheets. This would be one way of measuring it rather than using fake indices like the CPI index. And what he finds is that when you do this, when you take the growth in the central bank balance sheets, normalized by gold, divide by gold, you find that gold has still underperformed by 50%. It has failed to protect purchasing power as measured by dilution caused by central bank money printing. So this is just a chart of that from Bloomberg. And he goes through and finds out, he tests all the different stocks, stock allocations, bonds, commodities, different precious metals, silver, gold, gold miners, stocks, etc. And there's only one asset that he finds that has protected one against the growth in central bank balance sheets, and that is Bitcoin. You can see how Bitcoin, the sign that this chart is going down because Bitcoin is strengthening relative to these the central bank balance sheet growth. So this is very interesting, especially coming from sort of a traditional hedge fund manager like Raoul Pal. But what he ends the tweet with is really quite spectacular. I'll read it to you. My conviction levels in Bitcoin rise every day. I am already irresponsibly long. I'm now thinking it may not even be worth owning any other asset as a long-term asset allocation. In other words, a long-term holding as a hedge against inflation and central banks. But that's a story for another day. Obviously, still thinking through it. But this is very interesting to hear from another hedge fund manager, his thoughts on Bitcoin as a way of hedging against central bank balance sheet growth. Right now, as I'm recording this, we just hit 12,000 on Bitcoin, selling off a little bit, but up massively for the year. I believe Bitcoin's going to 100,000 and above. I can link to some of those videos below. But just wanted to share this tweet from Raoul Pal, which I think is quite good and really shows you, using historical data, the best way to protect yourself from central banks like the Federal Reserve. If you found this video helpful, be sure to hit that subscribe and like button. Let me know your questions and comments in the comment section below. And thanks a lot for listening. I'll see you in the next video.